What's up, YouTube? Welcome to more trades. This video is going to be different. It's not going to be a TA video. I'm going to be talking about strategies, and one of the strategy I want to talk about in this video is a scaling out strategies. A lot of traders, whether you're a beginner or not, fail or fall into a wrong side of a trade, and sometimes due to greed or for other reasons we forget to put a stop loss, or we have the belief that the trade has to go on our side. You need not believe on anything. You need to follow what the charts show you. But for instance, on this trade over here, if someone got in over here, say at around 20,900, and you were stuck in this trade and you believe the trade is going to go in your direction, all of a sudden you're seeing the wicks coming in, and it looks like it's going to pump up, and you're getting into the red. You're back into the green, and then you into the red again, and you just started off at 20,900. You were here, somewhere around here, and now you're way over your head. You're somewhere here, and now your liquidity is in the red. You're risking liquidations. You start adding a bit more margin into your trade, into your account on Binance or whatever exchange you're using. Then it starts dropping, and now you're gonna believe, okay, this is a BART pattern. We're gonna BART out, and we're going down. Definitely this time it's going to go down, even though the last two times it seemed like it would go down, and it continued higher, and here same thing, it went higher, but you still on the belief that we are going to go down this time. Even on the micro and this one, it showed you that we're not. Now, how do you scale out of a trade? Say you held on to your trade 20,900, and now you were here at 21.4, and you decided, okay, if it goes up and my entry is this level, I'm going to get liquidated. I'm just going to add more margin in. Now you're up here. All of a sudden, you can see this 1 hourly candle just pumped up from 21,400, almost 500 to 22,500. That's another $1,000 coin. That's why I always tell you to use stop loss. Now, to the strategy of scaling out. If you are in a short trade and price is pumping up, then the way to scale out is, there's several methods. I'm going to talk about one method at the moment. I'm going to talk about scaling out at pullbacks. So what do I mean? Now over here, you were at a severe loss. So even if it pulled back and you scaled out, you'll be thinking to yourself, when I was down here, I could have scaled out and I would just lose $10. Now up here, if I scale out, I'm going to lose 50. Why should I scale out now? It's like buying the highs and selling the lows. Why should I scale out? Well, the game is protecting capital. While you are here, what you can do is, for starters, when you're in the high of a range, say you're here, you're still holding on, you're not sure what you want to do. Now you're here. You're at 23,229. And if you have the capital, you buy a position. You buy a bigger position than the one you entered in down there. It's a risky move, but it could work more times than you think. But it is a risky move, because as you see, we broke out, we went even higher, and it was a very risky move. But if you have the capital to sustain it, and you get in at the right time, and you have the discipline to scale out, then yeah, you broke out over here, you were in the red, you added capital. Now your entry is up. Your entry is, depending on how much you opened, you increased in your position, or you added to your short. Then it's like opening a new short. They clump the trades in some exchanges, and others they don't, and some they clump them, like in Binance. So your entry point is raised up. Now you are at a loss. Now once price starts moving down, then the loss is less, because your entry price is now at around 21.9 or 22.9, depending on how much you added. Your entry point is here, And if say your entry was at 22.9, then over here you'd be in profit. And you could get greedy and say, oh, why don't I hold on? It's going down. It's definitely going down. No, this is where you have to commitment. You scale out. You take out 25 to 50% of that position, because you're not very sure, is it going to go up or is it going to go down? Now you are at the bottom of the range, so probability is if you come to the low of the range, you're going to bounce off. So probabilities are not in your favor of going down, so you need to scale out at this point. That is one thing. Another technique is when you enter a trade. I'm going to enter at 20,900. I want to enter $80. I'm not going to enter $80. That's going to be very risky. I'm going to put in $20 or even $15, and I watch what price happens. Oh, price is going down. I'm in profit, but I'm in so little profit. I wish I went in more. And all of a sudden you notice the stopping wick over here, and you're starting to drift out. You start forming this sort of a W, a double bottom over here, and you can see a bigger double bottom over here, and you start going up. You're not going to miss out. Even if you want to add to your position, you can wait to break down, negative retest, a rejection, then you can add at the rejection point. You add at resistance. So now you pumped up. You don't add at this candle. You wait for a rejection and a ranging position. Over here you ranged, you could possibly add. Over here when you came up, you add over here. So you slowly add into your position. You should do it as a pyramid. Your first position should be a small one, the peak of the pyramid. And as you get lower, or if you're looking at an upside down pyramid, if you're buying, as you go higher on pullbacks, DCAing on pullbacks in an uptrend, and DCAing on rejections on a downtrend. So that's how you enter a trade. You don't enter with all the amount you want to. If you want to enter it with $50, enter it gradually. Use 20 for the first entry, then add to your entry later if it's going in your favor. Obviously, yeah, you will bring down your entry point lower and it's riskier, but you're doing it on a pullback rejection. You add again, and your stops, move them into break even, into a small profit, into a bigger profit, gradually. Trail your stop. So that's a way of scaling out. And how do you enter a trade? How do you enter and exit a trade safely? Now, you should always enter with a stop loss. Your stop loss should be before entering a trade. You should know how much are you willing to risk. How much money do you want to put in it? How much money are you willing to lose to know that you're wrong in this trade? Yeah, so that's a technique I thought I should highlight, because a lot of people sometimes get stuck in trades with no stop loss. Now they're losing $10. They're like, no, I don't want to lose $10. It's too much. And all of a sudden it's $40, and it's even worse. So no way, I'm going to hold on. If I get liquidated, I get liquidated. No. First thing, you enter with a stop loss. If something happens and you fail to put a stop loss for some reason, then you should look on scaling out. Thanks for watching. Hope you liked the video. If you did, smash the likes, subscribe to the channel, join the free Discord, and if you'd like to support the channel, there's a link in the channel description and in the video description. More trades, I'm out.